What is going on YouTube? It's Brendan for Market Makers, your home for Wyckoff and Advanced Fibonacci TA. Guys, to come trade with us in our Discord trading room, the join button right underneath this video, where you can trade these equities, commodities, as well as all the cryptos, okay? Check out that room if you're interested. And guys, check out SimpleFX. I am a brand ambassador for them. I have the unique relationship and ability to give you a double first deposit bonus up to $5,000. So check it out. It is anonymous trading. Guys, I beat that to death. It's so important. It's anonymous trading. Email, VPN, that's all you need. Look at the video description for details and my tutorial video of how to use the platform. Also in the video description, I broke down the bonus structure so you could see if it's worth trying it out. And trust me, it's worth trying it out. Guys, I'm going to give you the asset setups in this video series, okay? For the equities, for commodities. I trade the indices often. I trade commodities often. This is a commodities beginning of a super cycle potentially. And in the equities, as you guys know, growth in tech and a primary downtrend. We're going to go over the trade setups on these videos. I think you'll really enjoy it and you'll really enjoy trading it on that platform. So let's go ahead and proceed. So I tweeted this out. Yes, I was actually active in Twitter. I'm going to start getting a little bit more active in Twitter. It is a insane playground for the mentally ill, but I do tweet some stuff every now and then. I tweeted out a screenshot of this chart. This is the Russell 2000. Okay, this is the Russell 2000 volume divergence, guys. Volume spread analysis, a key component in Wyckoff trading. This is when you have volume going down left to right, but you have price rise. Okay, you've probably heard about RSI divergence and stuff. Volume is a leading indicator. There's an expression. Volume doesn't lie, price often does, okay? If you have no volume, it is very easy to make a top when you hit resistance. I highlighted that here. You have declining volume well below. Look how null these candles are, these little white candles, well below your 21-day moving average. Volume divergence, yet you have price rise. You make a top, you fall 17%. As you guys know, big move in an index. This is the Russell, okay? Over here, you have volume divergence again. Look at your volume, declining left to right, a bunch of null and void candles. As price rises, you still get volume declination. Hit the 233, you make a top. You roll over, price descension 20%. And the trifecta, which is what we are doing now, waiting for that CPI rally, the street hoping that CPI comes in 8.2 or lower. If it does, I anticipate we will pump up to key resistance and look at the volume divergence. All of this volume, except for one bar here, all of this volume is below the 21-day average, and all of it is lower left to right after this bar. You see this? All of it's lower. Even these null candles, these candles that are basically almost non-existent, and they gave you the biggest price rise in the trend. Retail rally, guys. Weak hands, most likely to fail at one of these levels. We're going to go over the trade setups here for these equities. We're going to look at oil and natural gas as well, okay? So that's my Russell divergence chart. And then on the Russell, the actual chart itself, what we're looking at here, guys, let me go ahead and expand this some so you can see this. I have my GAN fans laid out. What we're looking at here, my target here at the 1 fib of 2058. This is your 200 and 233. That's where they're descending. This is what I want to see the Russell do, is pump up, meet long-term resistance. Near the 1 fib, you do have a cross section of angles here at approximately 1995, 1996, and the 1 fib at 2058 with the 233 and the 200 descending. This is a target if there is a CPI rally. If there's a CPI failure and inflation comes in hotter than expected, then you can expect a dump, okay? And you can see the Russell here respecting the fibs very cleanly, getting rejected at the 618 and holding the 0.5. So it made its cut pattern as we talked about. This is what we're looking for Bitcoin to do, and it did it, but Bitcoin hasn't broke out yet. The Russell has, and here we are at the 618 with our long-term moving averages here on the daily descending. Tomorrow we'll look at this in some smaller time frames as well. I'm going to go over this briefly here for these indices. So the Nasdaq, okay, the Nasdaq, same exact setup. Look at this, the Nasdaq volume divergence, below average volume, price rises, you get a double top out of this, okay? Roll down 14%. clear volume divergence. This is a trade I posted in my room, and this is a trade I took myself as well. And you can see price rising, volume is going down left to right, well below average volume as price rises, weak hands in the market. That gives you a clear top at the 200 moving average. Price descension 25%, 24.71%. And what do we have now? Third time is a charm again. Long-term moving averages are above us. And you can see on the Nasdaq, volume declining left to right. And the three candles that are the smallest in trend are your three biggest or your three candles that give you the biggest surge in price in trend. Okay, you see this? They are non-existent. Again, retail rally, weak rally. Wait and see if we get that. I hope we get the expectations for the CPI, because I want to see this pump up. This was such an easy trade to take. This was such a highly profitable trade to take. 24, almost 25% move in the Nasdaq, guys, and you can short this stuff on SimpleFX. Okay, this is tactical shorting that we're doing here. We are shorting the weakest assets that we can. Okay, the Nasdaq tech and growth, the Russell tech and growth, the SPX stays strongest longest. We don't want to play with the SPX. You can still short it. It's still going to descend if it makes a top and falls over, but the Russell and the Nasdaq will pay off more in the longer run because they are weaker. Okay, again, representative of tech and growth. And here's that trade set up for the Nasdaq. I have my D point on my pattern, 13,815 on the Nasdaq. I want to see this rise up, and that would get it to 233. And if it does get more euphoric, and we're going to revisit this tomorrow to see if there's any new price action, and another video will be coming after that CPI as well, because we want to see up candles. Okay, we want to see up candles. If that CPI comes in low, we're going to look at the 200. We got to look at the 233. One fib at 13,815 could be excellent opportunities to catch this next wave of descension after you get a wave up. Wave back down, guys. Again, I anticipate as they keep raising rates, as they keep doing quantitative tightening, despite what the talking heads on CNBC say, you're going to have pumps and dumps in these markets, particularly in growth and particularly in tech. And of course, you can see this same pattern playing out on the S&P. Below average volume, below your 21 days, bunch of null candles in here, like candles with zero volume almost, and it's just the price kept rising up, makes a top. Now remember, the S&P stays stronger longer. It has the ability to penetrate these 200 and 233 moving averages, but it still rolls over. Much more difficult to short a stronger index. This is a great decline though in this, so let me go ahead and measure this out, and let's go ahead and do this. 17.79% move. Again, the same move the Nasdaq made was 24%. You will get paid off more on the weaker assets, okay? The weaker assets will drop more after they are rejected. But this is a great short, and you're going back up again. And let's look at the Nasdaq, or let's look at this with the fib wave on here as well. And you're going back up, and you're going to find peak resistance again on the S&P. And this most likely, this could be a clear target, your 43.43 market symmetry, right? Right between your 233, your 200, landing right in here. We could see if price can come up, get rejected here, make some type of shape like it likes to do, like double tops, or if you just get some candle confluence, although this did end up being a double top as well. So you can see how this plays out right here, and I will be tracking the S&P, of course, as well, but really focusing on the Russell and the Nasdaq because that's where the money is. Let's look at WTI. WTI keeps pumping, but it is respecting the Gann fan very clearly, okay? So we look at the Gann fan here. You hit the top rung. You're coming back down. You're at 123 on oil. Like I said, this has to pull back. We were doing trades on this in the 90s. I mean, this is crazy, but this has to pull back so I can get an entry. I want it to pull back more towards support. The bottom of this channel, at least, would love for something to happen and oil falls through the channel and comes to a retest the ceiling here. Something to give us more upside potential, but I want to see this pull back some. It is above our 55 whole moving average as well. Natural gas, guys, this is what we talked about in yesterday's video, a pullback in natural gas. Look, we got all the way up to the Gann fan line, hit the Gann fan line, hit the top of my pitchfork, the 100% retracement, and then you get selling, okay? Commodities can be very volatile. Look at this. I mean, you don't see any clear type of trend here. You have, buying and selling just getting above the 21-day average. You got a buying bar above the 21-day average, and then boom, breakout selling bar, one single bar in an 8-hour time frame. This is profit taking, guys. This is profit taking on an asset, okay? You can see the volatility channel didn't even expand that much off of this one move because it's been expanded for so long with just the general price rise of natural gas. So this is something that it did pull back, but I want to see it pull back towards support. It didn't come down to the median line here in the pitchfork. It didn't come down to the bottom of this channel. And I would be much more interested in this if it did come back down here in the 817 area. It's at 867. So basically another 50 cents, 50, 60 cents. If it wants to drop down, come down here, I'd be more interested because you can definitely get much more momentum here with natural gas. Again, I fully expect this to potentially double by winter time. Okay. So this could be a great asset. It is a great asset to trade. It is highly volatile and you got to be ready. You got to buy it right, guys. Buying it right is half the problem. If you don't buy it right, you get caught in a move like that with leverage, can be catastrophic. So, all right, guys, hope you enjoyed the video. I answer your comments, questions in the video. Another video coming tomorrow. Excited about this CPI. Want to see these price rises. Want to get in on these trades because I want to get these trades going, get some money cooking. This is going to be a nice descent if we make a top. Remember, everything's an if. If that CPI comes out good, if we pump, if we make a top. But this is trading. This is TA. Probabilities. We're looking at probabilities, not possibilities. Anything's possible. All right, guys. Have a great day. Talk to you tomorrow.